everybody. Thanks so much for joining us this afternoon on our second edition of Surge Decoded. Today, we're joined with Rajan Anandan, Managing Director of Sequoia Capital India and Surge. Hi, Rajan. How have you been?
Very well, thank you, Alicia.
Hi. Yeah. So today, we're gonna spend 1 hour answering and decoding your questions about search. We know we've been receiving a lot on social, on emails, and we thought it'd be a great idea to just have a live stream where you can answer you can see and answer your questions, your burning questions on what is search, how what the application process looks like. So without further ado, I'm gonna pass the baton to Rajan Anandan.
Okay, great. Hi, everyone. I'm Rajan from the search team.
Receiving a lot
Um,
on social.
Before we actually open up for the AMA and get all your questions, I'm hoping that we can answer as many questions that all of you have about search. I thought I'd take a few minutes to talk about Sequoia and also the search program. I'm assuming all of you that are here today on the Zoom, but also those of you that are dialed into the live stream. I know there are quite a number of you on the live stream, YouTube live stream. I'm assuming you actually know a fair bit about search, but we thought it might be useful to take a couple of minutes and talk about Sequoia and search. So starting with Sequoia, Sequoia is a venture capital firm started in Silicon Valley 48 years ago. And our mission is to help the daring build legendary companies, right? So we really focus on partnering with the absolute best entrepreneurs who are very daring, who want to make an impact on the world and help them over a long period of time build legendary companies. So that really is our mission. If you go to the next slide, these are some of the very many companies, as you can imagine, over 48 years. We have invested in a large number of companies in the US, in India, in Southeast Asia, and also in other parts of the world. Sequoia has been very, very fortunate to partner with companies like Google, like Apple, like Cisco, like YouTube, Dropbox, LinkedIn. Those are a few of the very, very companies in the US. But then you look at in India, companies like Freshworks, Druva, Byju's, and Pine Labs, and then MPL in gaming, for instance, and then in Southeast Asia, Gojek, Tokopedia, Traveloka, more recent investments like Kopi Kanangan, right? So these are just to get a flavor of the kinds of companies and founders we've been fortunate to partner with across the world, and I'm sure most of you will agree that all these names, if not most of these names, are truly legendary companies. You look at companies like Google, Apple, WhatsApp, etc., as well as the companies in our region. So if you go to the next slide, Surge is basically a program that was launched by Sequoia Capital India. So I'll say Sequoia Capital India, but it's really the firm that invests across both India and South Asia and Southeast Asia. And we launched Surge in March of 2019. And as you can see here on the slide, Surge aims to engineer rapid early progress for startups by enabling a disproportionate access to capital, talent, network, and bring to these founders decades of company building knowledge that we have as a firm, right? And the whole reason we launched Surge is because we wanted to sort of address major gaps that we saw in the startup ecosystem when it came to seed stage companies in India and Southeast Asia. The gaps were around capital, the gaps were around mentoring, gaps were around company building support, and also really gaps on real learning. So despite all the progress we've made as a startup ecosystem across India and Southeast Asia, we still felt that there was a lot of learning that we could bring to founders very early in their journey that would help them accelerate their companies. So we launched in March of 2019. We just finished our third cohort. We have 2 cohorts a year, 15 to 20 companies per cohort. Every cohort is a mix of, usually it's about half the companies are from India, half the companies from Southeast Asia. So think about Surge, that is a program that has 30 to 40 companies per year that we partner with, half from India, half from Southeast Asia. So across our 3 cohorts, we've had 52 startups that we partnered with. They come from 6 countries. Obviously, this is India and across Southeast Asia. We have over 100 founders. So we have 110 founders across these 3 cohorts. So far, we've invested over $100 million from our fund itself. So we actually launched a seed fund, a $200 million seed fund, which is the fund that this capital comes from. We're also open architecture. So 80% of our investments, companies that come into Surge have co-investors. So we co-invest with other venture capital firms, other seed funds, angel investors. So as you can see, 80% of our companies actually have co-investors as they come into Surge. And so far we've been very humbled with the progress that our companies have made. Obviously, the most important focus is make sure that these founders in our Surge cohorts and companies are focused on building enduring companies from very, very early, right? Are they focused on the right set of markets that can lead to building large companies? Do we have the right mission? Are they hiring the right kind of talent? Are they thinking about architecting their business models the right way? Do they want, for instance, do they make sure that you don't grow into, you don't get into hyper growth mode before you achieve product market fit? All these basics of company building. And then also for the Surge companies, whenever they're ready to raise their next round of funding, we help them with that. So we have an event called Upsurge. Upsurge happens at the end of Surge, and about half our companies in a cohort would go into Upsurge right after they finish Surge. But many of them actually come back whenever they're ready to raise their next round of financing. So we have 2 Upsurges a year because we have 2 cohorts a year. And our next Upsurge actually happens in September for our 3rd cohort. But a lot of companies, actually quite a number of companies from our 2nd cohort will also be at the Upsurge that happens in a couple of weeks from now. In addition to the $100 million of capital that we've invested from Surge into our companies, we've had over $250 million of external capital that has come into our companies in Series A rounds. In fact, several of our companies have now already raised Series B. So we think capital raising is not really the objective, but we've been very fortunate to see that there's been a lot of interest from other investors in Surge companies as they come up to raise their Series A round. So that hopefully gives you a sneak preview of Surge. We can get into a lot more of the detail. I'm assuming all of you on this call are pretty familiar with Surge, but that's the objective of today, to try to unpack and decode what Surge is and what Surge isn't. So if you go to the next slide. So now what we wanted to do was we wanted to get a flavor of the audience who's here today. The first question that we have is, have you applied for Surge 4 yet? And by the way, those of you that may not have applied for Surge 4, if you've applied for a Surge, previous cohort of Surge, please say yes as well. So we should probably say, have you applied to Surge 4 yet, or a previous cohort of Surge, Surge 1, 2, or 3, you can say yes. Or if you haven't applied to Surge, any Surge yet, you can say no. So please pick one of these options and say yes or no.
Yeah, and if you're in the YouTube live stream, feel free to leave it in the chat because we're monitoring that as well.
All right, let's look at the results. Okay, 27% have applied to Surge 4 or one of the other Surge cohorts yet. 73% haven't. So actually, that's terrific, right? So let's keep going. That's pretty good. And then we had one more poll we wanted to run, so we get a flavor. If you go to the next page, team. Let's flip to the next slide. Okay, the second poll, and I promise this is the only other poll that we have for today. If you can tell us, what is the stage of the company that you're in currently? Are you at idea stage? Have you got a product but you haven't launched it, i.e. you know what you're going to build, you started building it, you've got a product but you haven't launched that product yet? The third one is you've launched the product or service but you haven't hit product market fit yet. The fourth one is you've launched and you think you have product market fit. And then the final one is you've launched, you've got product market fit, and you're way beyond that. You've already started generating a fair bit of revenue. So these are the 5 options. If you can pick which option your startup fits into, that'll also give us a flavor of where you are in your company building journey today. Okay, so we have about a third of the companies that are at idea stage, another third of the companies that are product but pre-launch, and about a third of the companies that have already launched. Okay, that's terrific. And by the way, this is if you look at our Surge cohorts, we have a set of companies that are pre-launch, right? Meaning they haven't got a product in the market. Then we have a set of companies that have launched but don't have product market fit yet. And then we also have finally a set of companies that have launched, have reasonably good product market fit, and also have some revenue. So, we've said this often, it's never too early to apply to Surge. So, because we have companies that are pre-launch all the way through companies that actually have launched and actually have a fair bit of traction where the founders feel that, they could benefit enormously from Surge. So that's actually all of you on this webinar call today are actually representative of what we see in a normal Surge cohort. So with that, Alicia, let's take questions.
All right, we're ready. So thank you so much, guys. I've spent last night actually pouring through and making sure we have like tremendous amount of questions. I think we have 300 as of this morning. So obviously we won't be able to go through all of them, but we'll try our best to see common themes and see where we can answer as much as possible. So first question is that, hey, Rajan, this is from Prashant. There's a question about like how would you prepare presentations for investors in terms of deck, insert while sending the PowerPoint as a deck to investor for the first touch, which is the Surge application, or while physically/virtually presenting the business plan to the investors?
Yeah, so I think it's a good question, Prashant. So firstly, the Surge application is pretty standard. So those of you that haven't applied, please go onto surgeahead.com, and maybe Alicia, you could add that both on the live stream as well as the chat here, so that folks know where they can find our website. So it's pretty standard, right? You can go through it. It will take you some time to fill that out, and then you can attach a deck to it. In terms of the pitch deck, those of you that haven't seen this yet, we did a 4-part webinar series on how to raise your seed round. And the second part of that webinar series was a session that was led by Peter Kemps, who's a leader investor in our Surge team. That was actually an hour and a half of, what you should have in your pitch deck. So what we would really strongly recommend all of you to do, and maybe I don't know whether you can find Alicia, you could post the links to that webinar series. Look, we would, ideally, if you have the time, if all of you are in fundraising mode, I'd recommend you. It's a commitment of about 6 hours because each webinar is about an hour and a half. But we'd recommend you to actually watch all 4 parts of that webinar series because it'll give you a very good sense of how you should be thinking about your fundraising process. But in terms of your actual pitch, I have a couple of thoughts here. One, keep in mind that your pitch if it's with Surge team, it's likely to be 30 minutes, maybe 45 minutes. Most normally it's our first intro meetings are for 30 minutes. It's good to have a set of slides, keep it to 8 to 10 slides, and make sure that it's very important to talk about your team, right? Who's on your team, whether it's 2 co-founders, whether it's just the 2 of you or just a founder, maybe with a few engineers, or maybe you've got a team of 5, or in some cases you have a team of 30 or 40 already, but talk about your team, that's sort of one page. And then you should really talk about a set of things that are pretty important, right? What's the mission of the company? What is it that you want to do in this world? Then you talk about what is the problem that you're trying to address, right? And really sort of talk about what's the problem, who's the customer, what's the problem you're trying to solve. Then you actually get into what's the solution, i.e. what's the product. And then to the extent you've launched the product, then you should talk about traction, right? Talk about the most important traction metrics. And this is where Peter's session would be very helpful because it gets into each of these things in a fair bit of detail. Then you talk about competition, right? How does what you're building compare with what else is out in the market? That's a pretty important slide. And then you talk about, so your growth plans, right? How will this evolve over the next 1, 2, 3, 4 years? You talk about that at a high level. You can talk about user growth to the extent you're focused on revenue. You can talk about revenue and so on. And then finally, you talk about how much are you looking to raise, right? And what are you going to lose it for? So think about 8 to 10 slides. They should be simple. They should be crisp. And keep in mind that you have 30 minutes or 45 minutes. And what you should do is really make sure that you're able to talk about your business in a coherent, simple, inspiring way, right? And try to get through your sort of pitch in 15, 20 minutes. And depending on the firm that you're pitching to, for instance, if you're pitching to Surge, it'll be over Zoom. Always be on time. Try to be early because sometimes we find that founders, because if you only have 30 minutes and you're 10 minutes late, you're only going to have 20 minutes. And by the way, if you're late by 10 minutes, then investors are like, look, if you can't even show up to a pitch meeting on time, are you really going to build a company over the next decade? Highly unlikely. So try to get there on time, and keep, and what you'll see is, depending on the firm, either investors will want to ask you questions as you go through it, or they'll keep their questions till the end. And actually, it's very investor specific. Some investors will let you run through the presentation in 15-20 minutes and then ask you 10 minutes of questions. Others will sort of ask you questions as you go along. But when you're asked a question, try to answer as precisely as you can. Don't sort of beat around the bush and give long-winded answers, because generally it's an indication that you don't really know exactly what the answer is. And it's perfectly okay to say, I don't know the answer to that. We haven't gotten to that stage. So you'll get this question of, what are your moats? And it's perfectly fine to say, look, we don't know what our moats are yet. We don't have moats yet, but here's how we are thinking about moats, right? And moats is sort of, what is your competitive, what are those entry barriers you're going to create in this business, so that another 100 companies can't do the same thing that you're going to do, right? So that long answer to your question, but I would really encourage all of you to take the time, if you're in fundraising mode currently, take the time to go and watch this series of the series that we created of these 4 webinar series. And Alicia, does that YouTube link have all 4 of the videos?
Yes. Yes,
Okay,
they
awesome.
do. It's a playlist of 4 videos, so you'll be able to see that. I think someone from our team will be sharing that on the YouTube channel as well, so you'll get to see that.
Okay, awesome, terrific.
All right, second question. Rajan, we have a lot of questions about this. Is Surge a good fit for a company at an idea stage? And what is the kind of level of progress that you'd like to see before it becomes interesting to evaluate for Surge?
Yeah, look, we have had companies, at the idea stage. When I say idea, it's founders. I would say it's got to be more than an idea, meaning exactly what you'd like to build, right? If you're still in the ideation phase, we would say that Surge is probably not for you, right? But if you are very clear on what you'd like to build, and let me give you an example of one of our Surge companies. So Chili Belly is a sort of a social commerce company based in Indonesia that is focused on fresh and FMCG to start with, right? We actually partnered with Surge, and when I say partner, I mean we invested in Chili Belly before they had a product, before they had launched their product. So I'll give you the background. This is a team of 3 founders. All 3 are very seasoned. 2 of them had built e-commerce companies before. One had worked for Lazada and Alibaba for a long time. All 3 of them actually knew the Indonesia market. 2 of them were serial entrepreneurs. One of them actually had worked in supply chain for a long time. They left their companies in June. June of 2019. They incorporated the company in July, and in August we partnered with them before they actually had their product. So in fact, they launched Chili Belly, I think a week or 2 before we started Surge 2 cohort on September, I think 3rd week of September. They launched 1 or 2 weeks before that. But we had partnered with them, i.e. we decided to invest in them in August, which is before they had launched the product. So in this case, right, hopefully you see a pattern here, right? One, this was a team that was very, very strong, where the founder market fit, and this is a very important point that I'll talk about. I don't know whether we have questions on this topic, what we look for in the team, Alicia, but if it is, otherwise I can talk about it. We look for this thing called founder market fit. Some people call it founder product fit, right? What is the reason? Is there a reason why this team has the right to win in this market, right? So this is a team that was deeply experienced in e-commerce. They had worked for some of the best e-commerce companies in the world, like Alibaba and Lazada. They had been entrepreneurs, so they had built companies before. They knew Indonesia. They weren't living in Indonesia at the time, but they knew Indonesia because they had built businesses in Indonesia. And they also were very clear on what they were going to do with this business, right? So, i.e., it was going to be social commerce. They were going to go out and recruit housewives who are going to be agents. They were going to leverage WhatsApp. They knew exactly how they were going to build out their distribution networks. They knew how they were going to do sourcing because they had done e-commerce before. So that is a team that we were willing to bet on before product, right? Because they were seasoned. They were very clear on what they were going to build. They hadn't built and launched the product yet. So I would say if you kind of fit that profile, i.e., you're a very seasoned team, meaning not your serial. You don't have to be a seasoned entrepreneur. When I mean by seasoned is there is very clear founder market fit, right? So if you ask yourself this, if we ask this question of what is this founding team's right to win in this market, we should be able to articulate that. And then, you don't need to say that, but by listening to your backgrounds and the idea that you're going to pursue, we should be able to say that's a check mark, right? I think the second is you have to be pretty clear of what is it that you're going to launch, right? It can't be, hey, look, we want to do roughly this kind of business. It needs to be quite precise. And by the way, what happens is once you launch, you start iterating, right? So almost always the business that you finally end up building is going to be very different to the product or service that you originally launched. But we want to see that you're very clear on what you're going to launch, because again, that gives us a sense of velocity, right? How quickly are you going to launch? How quickly are you going to iterate, etc. So it's a long answer to your question, but we have had, in fact, in our second cohort of Surge, where we had 20 companies, 6 of those companies were pre-launch when we decided to partner with them, i.e. they didn't have a product or service in the market, right? So a good third of our companies were pre-launch. So yes, we do, it is okay to apply to Surge, but I would, we would like you to be very, very thoughtful and see, is there founder market fit? Can you articulate that very, very clearly? Can you very clearly articulate why there's such a need for the product or service that you're going to launch? And then finally, be very clear on exactly how you're going to launch, when you're going to launch. Now, by the way, if you're going to launch a year from now, then that's probably not for Surge yet. You may want to wait closer towards launch, right? Because what we also, I think one of the things we've learned is, having a company go through all of Surge without launching may not be the best thing, because you can't really learn and apply, right? You can't apply the learnings that you've had as you're going through Surge. If you can't, what we really want to do is every week there's a lot of learning, and we want founders to go back to their teams and apply those learnings that we've had. And that's really when you get the most out of the Surge program. Because what we do is, as soon as we decide to partner with you, once we get all the, once we go through the diligence and the paperwork completed, we'll wire the funds to you, and then you start the Surge cohort. So our next cohort of Surge starts in November of this year, November of 2020. But we've already selected over 10 companies, right, for Surge 4. As I said, we have 15 to 20 companies per cohort. So we still have quite a number of slots left. But as soon as we decide to partner with the company, we go through the diligence and the paperwork, we wire the funds, and then you start the cohort when the cohort starts.
Perfect. I think that's a perfect segue to the next question, which is what will be the major learnings that we will get in the 16 weeks program? What will be the main focus? It's basically a question around the curriculum, and it just fits perfectly.
Yeah, I think it's a great question, by the way. The way to think about Surge is, so if you think about Surge overall, right, it's capital. We invest $1 to $2 million upfront, right? That's very important, because that gives you enough capital to focus on building the company as opposed to trying to continuously raise funding. Second is the Surge program itself. Think of that as a founder's academy, right? And then the third thing is we give a lot of hands-on support on the areas where our founders need help in their company building journey. And then the fourth one is we give access to an extraordinary mentor network. And the fifth one is we support through Upsurge, follow-on financing whenever you need to raise follow-on financing, right? All of this put together is what we call Surge. Now, so the Founders Academy, if we can call it that, right, which is this 14-week program. Actually, it was 16 weeks. This time it was 14 weeks because we ran it online and we could do it, every week as opposed to spend 5 days once a month, right? So the way you should think about this is we take all the important aspects of company building, right? Starting with what's the space that you're focusing on, and is the kind of space that you're focusing on large enough? Is the TAM, the total addressable market, and the SAM large enough for you to build a big business, right? What is the mission? It's very, very important as a company when you're building a startup from the very, very early days to have a mission that is inspiring, that is lasting, that is really going to rally you as founders, but also the teams that you're going to build over a period of time to actually go after this cause, right? We talk a lot about culture, right? And how do you make sure that you define what is the culture of the company that you want to be? What do you want your culture to be? How do you think about your values? So we spend a lot of time on that. We spend a lot of time on product market fit, right? So at the end of the day, in the 0 to 1 journey, the most important thing is to get to product market fit, right? So we tell all our Surge founders, until you get to product market fit, you should not be focusing on growth. You should not be growing your team. You shouldn't spend money on marketing. You shouldn't be adding salespeople. You shouldn't be adding lots of engineers. You just want to have a small core team of exceptional talent, the co-founders, plus a small team of exceptional talent. Sorry, that's my dog. I don't know, Alicia, whether you can hear my dog. So So basically we spend a lot of time on how do you build products, right? How do you iterate products? How do you actually make, what does it take to really get to product market fit? Then on product, we say, once you have product market fit, you're going to grow out your product team, right? How do you think about product prioritization? How do you hire product managers? What do you look for? How do you think about a product management organization, etc.? Then we talk about engineering, right? How do you hire engineers? How do you scale your engineering team? Hang on one sec, Alicia. Let me just go close the door.
No worries, no worries. Take your time, Rajan. All right. We have quite a few questions, I think, that I'm seeing from both the YouTube chat as well as the Q&A. I'll make sure to try to cover at least some of them as much as possible, as well as like all the ones that have come in through the landing page. We're at like around 320 something questions, so please be patient. We'll try our best to answer as much as we can. So give me a couple of seconds.
Sorry, guys, there was somebody at the door, and my dog gets so excited when there's somebody at the door. So, so as I was saying, like, so we talk about it. How do you hire engineers? How do you think about your engineering team? How do you build scalable? How do you make sure your product is architected for scale? Then we talk about sales. So each of these things is a day, right? So since we're running it online, and Surge4 is also going to be online, think of things as one full day. We spend about 7-8 hours on that day. We take one topic and we go really deep. Sales, right? How do you think about sales? How do you structure sales, founder-led sales, all those kinds of things? So that is really what it is. And the way you should think about this is, from the programming, you will get a few things. One, you'll get a holistic but very deep view on what it takes to build an enduring company. Second, you'll be able to take deep learnings that you can apply immediately to the areas that matter most, right? So for our companies that already have product market fit, that are in scale up mode, for them, it's all about how do we implement OKRs, right? Objectives and key results. How do we make sure we hire and scale sales, right? How do we make sure we go from, let's say, 500K revenue to 2 million, 3 million of revenue? What does that really take, right? How do we think about growth marketing, right? How do we think about making sure that we have the right culture in place so that when we go from 20 people to 50 people to 100 people, we are able to do that. So the way you should think about it, you'll get sort of a holistic and deep view of what it takes to build a great company. And then depending on where at the stage of the company that you're in, you will get a lot of learnings that you can apply that will help you get to your next stage, right? So for instance, if you're pre-PMF, product market fit, we'll be working with you very, very close to see how can we get you to product market fit? Because the reality is, until you get to product market fit, you should not be doing anything else. So that in a nutshell is what the actual content programming is. But also within the 14 weeks, we have a lot of office hours where you get access to all the Surge investors, you get access to a lot of the experts and the mentors that we have, right? And so on and so forth. So it's a pretty intense 14 weeks, but it's one day a week. So you should think of it as time commitment from you, from let's say the if it's one or two co-founders or three co-founders, it's really one day a week from about 9 a.m. India time. So call it, 10:30 Indonesia time or 11:30 Singapore time till about 5 p.m. India time, right? And then we have breaks in between so that people can sort of absorb, think through the learnings, etc. And then we expect a lot of those learnings to be applied to your company. So right, we were doing Thursdays, right? Thursdays was Surge Thursdays, and we would start at 9 a.m. with check-ins where about 5 out of the 15 companies would spend 5-7 minutes each saying, look, here's what we learned last week and here's how we applied it to our business. And that way, you start creating a lot of not just learning, but also applying your learning to the startup that you're building.
Nice. All right. I think the next question is slightly related to this. Florence asks, how involved are you in the startups that you invest in? Do you help in recruitment, strategic decision making, and other supports as well?
No, absolutely, right. Short answer is absolutely yes. So the way you should think about Surge is what you make of it, right? So I'll give you an example. Telio is is sort of by far the most interesting B2B e-commerce company in Vietnam, right? And Saifong, and they were in our first cohort of Surge. So Saifong and his co-founders, they had a very, very strong business team. They understood what they were doing. They were very clear on what they were doing, etc. But they wanted to build out their technology team, their engineering and tech team, right? So the CTO that Telio has, as well as the first 30 engineers, the Surge team helped them recruit, right? So recruiting is a big focus that we have. We leverage our networks. We have partnerships with search firms. We help with hiring. In fact, before I joined Sequoia, I was at Google for a long time, where I ran Google's businesses in India and Southeast Asia. So I actually help interview heads of sales for several of our companies, right? So final round interviews of heads of sales for several of our companies. I've been in final rounds for heads of marketing and so on. So what you'll see is you get a lot of help on the areas that you think are most important, right? So because we have office hours, our founders are able to sign up, whether it's with me, whether it's with Shalendra, with any of our investors, or whether it's with Ollie, our CMO, or with Alicia, who's a master at sort of social media, or it's with Payal, who runs comms. We have so many of our leaders. Roy, who's our CTO, is now a full-time investor. Sign up with, so we, all of us open up our calendars for office hours, and you can come and talk to us. It could be as tactical a question as, hey, look, we are doing a press release. How do you think we can get the best distribution for our press release? All the way through, hey, we are trying to think through a fundamental business model shift, right? We are thinking about going from this kind of business model to this kind of business model. Let's talk about the pros and cons. So we are available all the time during that 14-week period. And even after that, we're available when our founders need us. And think of it as, you're getting, 48 years of institutional experience in building companies like Google, like Gojek, like Tokopedia, like Traveloka, like Byju's, like Freshworks, right? Coming to you at a very, very early stage to help you shape your company. Hey, there's a question here from Sarah. Shall we take that? It's on the, we applied, the question here is from Sarah. We applied for Surge 1. We'll be applying for Surge 4. Can we use the same two recommendations, references who can vouch for you that we got for Surge 1? Absolutely. Yes.
All right.
I
The
hope
other
that
question
that was
is,
good, Sarah. I'm sorry you had to ask the question many times. That should have been
yeah.
straightforward.
All right. What are the focus sectors areas for Surge, Rajan? Which sectors are more likely to receive interest from the Surge team?
Yeah, that's a great question. Look, look, there is no right answer, because every time we say, these are the sectors that we are interested in, we find an amazing founder who's doing some incredible thing in a sector that we hadn't historically had interest in. We're like, of course, we're gonna want to partner with you at Surge, right? So keep in mind that what we're looking for is extraordinary founders who are truly sort of missionary, right, and are daring, that want to go out and do things that haven't been done before, going after very large markets. That's fundamentally sort of what we're looking for, right? Now, obviously, given COVID, we have seen significant tailwinds in several sectors, right? International travel, very, very challenged. Hospitality, very, very challenged. Co-living, very, very challenged. Offline retail, very, very challenged, right? So I would say, look, if you're in a sector that is deeply impacted by COVID, currently it would be very difficult, even if you're an extraordinary team, it would be very difficult for us to consider you for the next cohort of Surge. But look, a year from now, COVID is going to be behind us, and I'm sure we will, get back to looking, in a very exciting way at, let's say, if you're building an international travel startup, right? So I would say, look, unless you're in an industry that is deeply impacted, i.e., look, all airports are going to be shut or going to be open only to a small amount of time capacity for the next little while, right? Or you're trying to build some very interesting play in hospitality. Those would be very challenging for us in the near term. But outside of that, look, we continue to invest in all segments. Needless to say, lots of excitement in edtech, right? We've had many edtech interesting companies like Doubtnut, Class Plus, Scalar Academy, CoLearn, and so on. I mean, we'd love to see more tech companies from Southeast Asia. We continue to be very, very excited about digital health. So we have companies like Fitter, which are in online fitness. In India, we'd love to see more companies in digital health, both in India, digital health, fitness, mental wellness spaces like that in India and Southeast Asia. We'd love to see more SaaS companies. What's very, very interesting is 11 out of our 15 companies in our third cohort, the cohort that we just ended, were B2B companies, right? And when I say B2B, it's broadly B2B. It's SaaS, enterprise SaaS, mid-market SaaS, SME tech, and also B2B commerce. So companies like, for instance, Katabook, right? We have Katabook in India, we have Bukukas in Indonesia. We think there's massive amount of opportunity for SME tech companies. We like SaaS, global SaaS. We also like actually regional SaaS. In fact, one of the companies that's going to be in Search for is basically a SaaS company that only has revenue from India, right? But they've got meaningful revenue from India, and we think India can be a sizable business. And then if you add Southeast Asia and GCC, we think this can easily be a very, very large company. So we like SaaS of all sorts. We like SME tech a lot. We like B2B e-commerce if the take rates are interesting. I would say that we are not particularly excited about negative contribution margin businesses, right? So this is kind of important. So I would say, if you ask me, what are the two types of things we're not excited about right now? One is sectors that are deeply impacted by COVID. Not as excited currently, because it's not clear when things are going to open up. I mean, look at India, we're adding 80,000 cases a day of new COVID. I'm sure Indonesia, it seems to be looking better. Although I think those of you that are in Indonesia know that it's not clear whether there's enough testing that's happening or not. And the other thing is, we are not particularly excited about businesses that have negative contribution margin. So, you probably know who you are. If you have negative contribution margin, I would strongly urge you to figure out a way to get to positive contribution margin. But other than that, look, we are very, very excited about, again, right, I go back to this. We are looking for extraordinary founders that are going after very large markets. That's fundamentally what we're looking for.
Nice. All right. Next question, I think is a little bit relevant. What is the minimum market size a VC would be open to considering below which it'll be like a complete deal breaker? Meaning that, we always talk about we want to back like large enduring companies. How big should it get?
No, I think it's a great question, right? And it's one that maybe a lot of founders don't quite understand yet. Look, at a simplistic level, even though Surge is a seed stage investor, right? We want to see companies get to at least $1 billion of valuation, if not many billions of valuation, over some period of time. Not in the next 2 or 3 years, but in 7, 8, 9, 10 years. We want this company to become a $1 billion company, right? So what does it take to be a $1 billion company? Not now, but let's say in 7, 8, 9, 10 years. That depends on the kind of company you're building. So let's say you're building a SaaS company. At a minimum, you need to get to $100 million of annual recurring revenue to get to $1 billion. And that's if you're a SaaS company at 100 million ARR, if you're growing at 50% with high gross margins and very good LTV to CAC, you could be valued at $1 billion, right? So when we look at a SaaS company, the question we're asking, other than, look, is this a founding team that's terrific, etc., we look at the market and we look at the go-to-market model and say, can this company become a 100 million ARR company in not now, but in 7, 8 years, whatever the time frame is, right? If you're building a DTC brand, by the way, I didn't talk about this, but we have many DTC direct-to-consumer brands in Surge. So just in the third cohort of Surge, right, we had a company called Drink Prime, which is a subscription-based water purifier service based out of Bangalore. We had a stealth company, which is in the beauty space in Delhi. We have Hangry, which is basically a cloud food brand that we're very, very excited about in Jakarta, focused in Indonesia. DTC, right? So if you have a direct-to-consumer brand, for that company to be worth $1 billion, you have to get to between 200 to $300 million of revenue with high gross margins. So we look at that market and say, look, is it possible that over the next 6, 7, 8, 9 years, this company can get to $300 million of revenue or not? If it's hard for us to see, and by the way, this assumes, like the team executes superbly, you're able to raise capital, you continue to, we don't have, lots of things have to go well, right? Keep in mind, by the way, this is the assumption that we make, but as we all know, lots of, or very few startups will get to that stage. But we have to very early in the game, when we look at a market, that's what we are trying to see, right? So if you're an e-commerce company, right? If you're a third-party e-commerce company, we have to believe that your net revenue, not your GMV, we don't really care about GMV. We care about your net revenue can actually get to several $100 million so that, your valuation can be over $1 billion. So I hope that gives you, so depending on the kind of company that you're building, I would urge all of you to go and do the research to figure out what are my what I call trading multiples, right? Trading multiples is not what happens now. It's what happens when you're much, much larger, right? So for instance, if you're a SaaS company and you go public on NASDAQ, what would your trading multiples be? Today, the trading multiples are between 8 times ARR all the way up to about 30 or 40 times ARR, right? So you look at Zoom's trading at a crazy multiple. Now, there's only one Zoom in the world right now. So most SaaS companies will trade. When I say trade, it's the valuation way to come up with a valuation, will trade at 8 to 10 times ARR, right? Annual recurring revenue. Direct to consumer brands, we think will trade at between 3 to 5 times revenue, right? So if you have $300 million of revenue, you will most likely be valued at over $1 billion today. And so that's sort of how we think about, it's a long answer to your question, but that's sort of how we think about how big can this get question. In fact, we at Surge, we have a session where we actually get all our founders to think through very, very deeply. We have a whole day focused on this where, firstly we talk about this and then we have the founders do the exercise. What does it take for them to get to $100 million revenue? And a lot, some of our founders just come back and say, look, we can't get there with our current model. So therefore we are going to pivot dramatically. And we've had that happen a couple of times and it's been very exciting.
Yeah, that's a really good question. I think we did a webinar on this a couple of months ago with Akash Kapoor. So that webinar, unfortunately, is not yet put on YouTube, but stay tuned. We're going to do more we're going to be posting more content on this YouTube channel as well as on other sources. So I think there's a lot of questions I've seen on both YouTube, Zoom, as well as like on the landing page around the registration. Some people said that they haven't registered their company. Others say that like they're registered in Delaware or other parts of the world. How do we think of companies and how they register?
No, so that's a great question actually. So for Surge, we need to have a meaningful presence of the company in either India or some Southeast Asian country, right? So what does that mean? Company incorporation can be in Delaware. That's perfectly fine. But either, let's say you're building a SaaS company, right? And your market is the US. So what do you have in, let's say, India or Singapore or Vietnam or wherever you're based? Like, let's say you have two co-founders. So let's say company is based in Incorporated. You're targeting the US market. One founder is in the US, one founder is in India. You're building out your engineering and product team in India, but your sales team is going to be in the US. That is perfectly fine. But let's say your company is incorporated in Delaware, but your entire team, your co-founders and your entire team is based in the US. That won't work for Surge because there's no real connection to India or Southeast Asia. So company incorporation is not as important to us. What's very important is, what is it that, what do you have in India and Southeast Asia? Are you focused on one of these countries? If you're an Indonesia company focused on Indonesia, perfect. If you're an Indonesia company focused on the world, perfect. If you're a Vietnam company focused on the world, perfect. But if you're a company based in the US, focused only on the US, doesn't work for us.
Got it. All right. The next question is around the selection process and what happens. So basically, they're asking like, one, what are the selection criteria that happens for Surge? And then the second question is, how do we get notified? How do we get notification? Will we get emails? Will we get emails around like whether we get accepted or not?
Yeah, no, absolutely. So I think so is the first part of that question, Alicia, what is our selection criteria?
Correct.
Okay. So look, again, right? What we're really looking for is first and foremost amazing missionary founding teams. Okay. So let me break that down, right? One is sort of what I call founder market or founder product fit. We spend a lot of time thinking about what is the reason, what is the right of this team to win in this market, right? Do they have a set of either relevant experiences or insights? So for instance, one thing we find is people who've experienced the problem that they're trying to solve, i.e. they experienced some problem in their lives or in their professional careers, and they said, look, this is a terrible problem to have. I'm going to go solve this myself. So I don't know how many of you listened in to, Eric Yuan, who's the founder of Zoom, joined I did a fireside chat with him a couple of weeks ago. And Eric talked about this, right? He launched Zoom because he was at WebEx. He was head of engineering at WebEx, and he just hated the product because he just kept getting consumer complaints, right? He says, I don't want to deal with this anymore, right? I want to build a product that users love, not that users complain about all the time. So something that you face, right? So this notion of founder market fit. Why are you building what you're building, right? Then we look at is this a team that we think is going to go for 10 or 15 years to build this company? Are they in it for the right reason? Do we think they have resilience? Have they worked together? That's pretty important, right? And then we also try to figure out, look, this is harder to figure out, but Is this a team that we think can build a team? Are they going to be good at attracting a team? Is this a team that's going to be, can become good at sort of raising funding? So that's sort of the team, right? And that's a big component. We put a lot of weightage on the team. The other thing we look at is the market. As I said, look, is this a market that's large enough where you can build a large company? I just walked you through exactly the thinking that we have, right? If you're a SaaS company, do we think you can get to $100 million of revenue? If you're a DTC company, can you get to 250 million? If you're an e-commerce company, can you get to 100 million plus of net revenue? If you're a payments company, again, can you get to $100 million plus of net revenue? Things like that, right? And then on the market, the other thing we look at is it a very crowded market, and are you going to be able to cut through, right? Meaning, do you have something that's truly distinctive that can cut through in a crowded market, or are you going to try to go and create a new market, right? And both of those things are fine. But if you're in a crowded market and it's not clear and you're not able to articulate how you're truly going to be different, then that's going to be very difficult, right? So today we get a lot of pitches for edtech companies, but it's not clear how they're going to be different to, one of the many edtech companies that are out there. And the third thing we look at is if you have launched, and this is very important, right? We look at the metrics to look for early signs of product market fit, right? So the reality is very few search companies have strong product market fit, because if you have strong product market fit, then you should be able to raise your Series A, right? So we are trying to look for early signs of product market fit, and it's not even early signs of product market fit. We're looking for early signs of customer love or user love, right? What does that mean? So let's say you launched a consumer app, okay? And it's a daily use case, and your 30-day retention is 7%. There is no user love, because what it says is 93% of your users don't use your app 30 days after they've downloaded the app, right? This is not a product that is going to be amazing, right? So that's not very good. Whereas on the other hand, if you launched a product, you only have 10,000 users, but your monthly retention is 45%, that's actually pretty interesting, right? So that says, okay, 10,000 users really like your product. So we look at, depending on the, again, right, if it, depending on the product, with a consumer app, it could be an e-commerce company, we look at, GMV retention. If it's a SaaS company, we look at churn. So for instance, right, if you're an SMB SaaS company and your churn is 2.5%, that's actually pretty good. If you're an SMB SaaS company and your monthly churn is 8%, that's not good. Basically means your whole revenue is gone in the first year, right? Monthly churn 8%. Annual churn over 100%. If you're an enterprise SaaS company, we look at to say, hey, look, you have 10 customers who pay you, and do they love you? We'll call them up. We do ref checks on your customers. So think of that as the third one, right? We look at metrics. So for instance, if you're an e-commerce company, you've launched, you're up and running, you've been around for a year and a half, and you're still running at negative contribution margin, and it's not clear how you're going to get to positive contribution margin, we're not as excited about that. So those are the three things: team, market, traction. That's sort of what we look at, right? And we look at every application and look at it on these three dimensions. So that's the first part of your question. And what was the second part of the question, Alicia?
Sure. The question would be like, what is the selection process itself like, and what kind of communication? When will the cohort 4 be announced?
The selection process is very simple. You apply online. We have a team that, we have a search team which has 6-7 investors. We look through your applications. If we don't think that this is clearly not a fit, then we'll let you know. Historically, it has taken us time, I must admit, which we are fixing, because we had a very, very small team. We had thousands of applications, but we're trying to get better at that. So what we're trying to do is, within 3 weeks of you applying, we want to get back to you and say, either this is not a fit for Surge, please stay in touch, or we want to set up a meeting, right? And then if it's of interest, then we'll set up a meeting. It's a first introductory meeting where we'll try to get to know you. We'll try to get to know your business. If that meeting goes well, then we'll actually spend some time, could be 1 week, could be 2 weeks of work. We call it sort of do more work, and really try to understand the market, get into your metrics, get your data, etc. And then we'll have 1 or 2 more meetings. So think of it as you apply, and if all goes well, within 2 months, you should have a decision from us. If it's a no-go, you should hear from us within 3 weeks. We're trying to do that. We haven't been able to do that in the past. But now, in fact, even yesterday, we had a new Surge team member join. So as we grow our investment team, we'll be able to get through these applications faster. And then if we want to have a meeting with you, you should expect that you would have 2 or 3 meetings with us. You'll share the data, and it's helpful if you whatever data that you have, if you can have it ready so that you can share it with us. Like, for instance, have an MIS if you've already launched, have the user data, if you've already launched. That's actually useful. That's sort of the process that we go through.
All right, Rajan, I think another question we have is that, can we join if we are already joining another accelerator, or if we already have an investment from somebody else?
Yeah, absolutely. Look, so we've had companies that have gone through Y Combinator. I see that there was a question on that. In fact, this current Y Combinator batch that just graduated, one of the companies we are very excited to partner with them for Surge. So we have companies that we have a lot. As I said, we have a lot of companies. 80% of our companies have another co-investor. Some of them had an investor before, a seed fund or a venture fund had invested, and they come into Surge. Others, we co-invest with other funds. So absolutely, right? Look, so it's never too early to apply to Surge. We can't say it's never too late, because if you're a Series A company, then you're too late to apply to Surge. But if you've raised half a million, a million, million and a half, you've raised 100K, 300K, 500K, million, million and a half, that's okay. We can still look at you. We can still look at you for Surge. Again, we go back to the same basic principles of what we look for: extraordinary mission-driven founders, large markets, and if you've launched, we're looking for early signs of great user love.
Perfect. I think there's a couple of other questions around solo founders. Can solo founders apply to Surge, as well as, what is the minimum age to apply to Surge, if there's
Yeah,
any?
so yeah, good questions. Look, we have no minimum age and we have no maximum age, right? Again, right, it's never too early to start a company. It's never too late to start a company. So I think that's important. We actually have solo founders, right? So in our third cohort, Nelly, who's the founder of Tiger Hall, is a solo founder. Vivek, who's the founder of Pentester, is a solo founder. We have actually quite a number of solo founders. We think it's easier if you have co-founders to build a company, but that should not be. We've had quite a number of Surge companies that have been solo founders. So Column, for instance, was a solo founder. So I can go through the list, but we have quite a number of solo founders. I think
Wonderful.
Sarah had a addition to the other question. Should they have to send? Look, you can just attach the same recommendation again, Sarah, and maybe even in your application, just say that, hey, look, I attended the Surge Decoded, and this is what I was told. So here's the recommendation that they gave before.
Hey Rajan, I think there's a lot of people who wants to update their pitch decks after listening to your talks. They're asking where can they send them, and can they update their pitch decks?
Yeah, no, absolutely right. So what you should do is just update your pitch deck, reapply, or maybe what we should do, Alicia, why don't you work with Joy
Sure.
to figure out how this can be done. Again, guys, look, you can keep applying to Surge, right? And we'll try to make it easier so that you don't have to redo all the work. And the other thing that you should do is maybe this is another thing, Alicia, we should work on, is companies that have applied to Surge, if there's a way for them to keep us updated on their progress, right? Meaning, hey, look, we've launched, and here's some of our metrics. Like what we normally get, we get investor updates from our Surge companies. Maybe we can make it easier for companies to update us so that they're not constantly trying to send us new decks and so on and so forth.
Great. I think there's like a couple.
There's a question from Soumya. Shall we take that? Several times there's an overlap in the business models of Surge applicants and existing Sequoia portfolio companies. Does the Surge team consider such applicants? How much of an overlap is okay? So look, if you're a direct competitor with a Sequoia company, then we won't consider you for Surge, right? Or if you're a direct competitor with, say, a Surge company from our last cohort, right? So then we won't consider. But the reality is, look, I mean, every space is very large, right? So if you look at edutech, I mean, Sequoia is the largest investor in edutech in India. Byju's, Unacademy, Doubtnut, the list goes on, right? So as long as you're able to credibly articulate exactly what you're doing or what you plan to do, and to the extent if it does overlap with the Sequoia company, you should just articulate how it's different or it's not. And we'll be very respectful to you. And if we think that and by the way, we will let you know if the reason is we can't accept you, and we've been very clear with some of our Surge applicants saying, look, we really like the founder, we really like what you're trying to do, but it competes with an existing company, then we'll let you know that. But you should apply. I don't think you should worry about applying. You should apply, and we'll sort of let you know.
Sounds good. All right, Rajan, somebody was asking, how do you hire and select a brilliant A+ team?
Yeah, no, I mean, I think it's a great question. So firstly, I think in terms of what's an A player, we have a whole session on this at Surge, right? It's four things that you should be looking for A team, team members who are A, right? What does A mean, right? So the first thing is functional capability, right? The second is sort of sort of soft skills, right? Commitment, call it commitment. The third is cultural fit. Do they fit into the culture that you have? And the fourth one is sort of learning agility, right? Are they able to learn very, very quickly? Because in an early stage company, learning is sort of super, super important, right? You need to learn and you need to unlearn every single day. So for instance, if you're hiring a product manager, number one, they better know product. They should not be somebody who's going to learn product on your watch, because as a seed stage company, the last thing you need is to be a university where people come to learn how to do things from you. And this is especially true if you yourself as a founder haven't been trained in product management, right? So that is the first one. Check mark. You're trying to hire a product manager. Are they trained in product management, which is the functional skill, right? Second is, look, so do they have sort of this notion of commitment, right? Look, the reality is, as all of you know, to build a company, it takes 18 hours a day, 7 days a week, right? This is not a 9 to 5 job where you're going to talk about work-life balance, right? So if they want to talk a lot about work-life balance, that's not going to work, right? So are they really committed to giving everything they've got, work day and night, to kind of make this success? Third thing is cultural fit, right? This is why it's important to define your cultural values so that you can figure out, does this team member, fit your cultural values or not? And that's why it's important for any new hire to meet a couple of people from your company so that you're testing for this. You're assessing, not testing, but assessing the cultural fit. And then the last thing is, you're trying to decide, you have to determine, can they learn quickly and unlearn quickly? And a lot of what they've done in the past will give you a sense of that. And a team member needs to be a check mark on all four, right? For instance, if you have great functional expertise, but you don't think they're going to fit your culture, don't hire them. If you have great functional expertise, but you don't think they're going to really work 18 hours a day, 7 days a week, don't hire them. If they're willing to work 18 hours a day, 7 days a week, but they don't have functional expertise, don't hire them. Because at a seed stage company, you don't want to be the university, right? You don't want to be the place where everybody's going to learn how they're going to get their job done, because you want to actually hire people who know what they're doing, especially your early hires, right? Because then they can help you accelerate your company building journey.
All right.
There's a question from Chandrahas, Alicia. What do you think about startups in agriculture? Hey, look, we want to see more agtech companies. Sequoia's very first investment in agtech was a company called BJAC, which was in our second cohort. We also made an investment in a company called DHeart, which is our Series A investment that our venture team made. But we'd love to see more agtech companies in India. We also would love to see more agtech companies in Southeast Asia, right? Indonesia, Vietnam, Thailand. I mean, these are all large ag markets where we are not seeing enough. So we'd love to see more agtech companies.
Perfect. With that, I think the time is quite up. Thank you so much for taking time to talk to us, to join us. And we are basically like a startup. Your feedback will help us to improve our next events. We want to hear as much feedback from you. We actually really go into the feedback one by one. So please do fill in the feedback survey. It'll help us to figure out what next events to bring to you guys. All right, next slide.
Terrific. Thank you, Alicia. And also, just on that point, Gina just posted the feedback survey. Please do take a minute to give us your feedback, as Alicia said, because we also want to figure out, right, are these things useful that we do? We do this thing called Decoded. If it's useful, we'll do it. Otherwise, we'll change it. If you want us to do something differently, let us know. If you think it's useful, let us know. So please do that.
Yeah. And then we do these events once every 2 weeks. We generally run some kind of webinar. So please do follow us on social media. We'll always let you guys know if there's upcoming events, as well as like via email. And then last but not least, applications for Surge 04 close on September 18. So if you're looking to raise for a seed round, please do check out surgeahead.com/apply. And with that, thank you so much for taking time to chat with us. Rajan, thank you so much for spending 1 hour of your time today to talk to everyone here. We really had a wonderful time with you.
Absolutely. Thank you, Alicia, for hosting this. And thanks to all the founders who've joined us. If you are raising a seed round, as Alicia said, we'd love to hear from you.